Something I've been thinking about, what we often hear as day traders is that it's risky. You will be gambling, you will be losing all your money. And I think that's actually a myth from back in the old days where that was the truth. Let me try and explain why. Because in the old days, say 20, 30, 40 years ago, there was no way to learn how to day trade other than risking your own capital, also at the practice stage, so to speak. There was no demo, there was no prop accounts, no way to really reduce your risk when you were trying to learn how to trade. Fast forward to today, that's completely different. Nowadays, you can jump on TradingView with a paper account and trade anything you want, really, stocks, indices, commodities, whatever, with absolutely no risk. And then once you're ready, you can jump to prop firms, where if you don't know how prop firms work, you buy an account, you risk a little bit of that capital, say $100 of your own money, and then you get access to, let's say, a 50K sim funded account or sim challenge account. But what you really get access to is a certain amount of drawdown on a 50K account. That would be, for example, $2,000 of drawdown, but it's all simulated capital. So it's a fantastic practice arena for you to dial in your strategy. And that takes time. It takes months. For some, it takes years to really dial in your strategy and your psychology. But my prediction is that a few years from now, we're going to see a lot more successful day traders because they have been able to practice, to hone their skills in the prop environment, in the simulated environment. And then over time, as you dial in your strategy, you become consistent and you've got your psychology dialed in as well. You might then decide to start trading your personal capital. But that is from a completely different standpoint than back in the old days where you would jump right into it with your own capital.